Hi friends, today let us talk about Amber Enterprises, another big EMS player we are covering in this channel along with Dixon and Keynes Technologies. This Gurugram based company started out with AC manufacturing and currently holds more than 70% market share in the outsourced AC market and 28% of the overall Indian AC market. They are the contract AC manufacturer for all the big brands here in India. That is LG, Whirlpool, Voltas, Daikin, Hitachi, Godrej, Carrier, Blue Star, etc. So they are the biggest player in the AC contract manufacturing space here in India. Second, when the inverter ACs came along, they started assembling the PCBs for them as well and later branched out to assembling PCBs for other home appliances like the microwaves, refrigerator, and are now targeting the IT hardware, telecom equipment, smartwatches, smart meters, automobiles like the EVs. While they have been assembling PCBs for about 5 to 6 years now, they are now getting into PC board manufacturing as well in a big way. That is the manufacturing of bare bones PC board PCB in a big way by having a plant in Hosur near Bangalore. This Hosur plant is being built at the cost of 650 crores and is expected to become operational in Q4 of next fiscal year, that is FY26. More on this later in this video. So other than the contract AC manufacturing and the PCBA business, the company has a railway subsystems and mobility division which started supplying ACs for metros, Vande Bharat and Rajdhanis and Shatabdis. Now they are expanding their portfolio of products for the railways by getting into manufacturing doors, gangways, pantry equipments, MCUs, etc. for passenger cars, which should take their valid share from about 3 to 4% to nearly 20% in the railway segment. In the railways and mobility segment, the order book visibility is currently at around 2000 crores and production will commence starting Q1 of next fiscal, that is mid of 2026. So that's the brief introduction of the company. Now let us look into their business in little more detail. First, as I said, they are the leaders in the AC manufacturing. Among the consumer appliances, ACs have the least penetration here in India, which is about 8 to 10% at present. Only about 8 to 10% of the households in India have ACs. But with increasing household income and as well as the warmer temperatures, ACs are expected to grow by about 15% each year and hence the market is set to double its size by 2030. Every year our planet is setting records for highest temperature. It's always like highest September ever, highest March ever, highest April ever. That's how it has been from past 2 to 3 years. And hence ACs are becoming a necessity here in India as well. With 70% market share in AC manufacturing, Amber stands to benefit from this trend in the record temperatures. In fact, due to the heat wave experienced last year, while the records for temperatures were being smashed, the company was setting records for their revenues with 41% year-over-year growth in Q1 of fiscal year 2025, 82% growth in Q2 and 65% year-over-year growth in the last quarter, that is the latest quarter, that is the Q3 of FY25. The EBITDA growth was also similar, 109% year-over-year growth in Q1, 82% in Q2 and 43% in Q3. With the rising temperatures due to global warming, these kind of numbers for an AC manufacturer like Amber are expected in coming years. The revenue from the consumer durables segment of Amber, for which the AC manufacturing is the major theme, is projected to grow by upwards of 25 to 30% every year for the next 3 to 4 years. Along with the AC's firm is also trying its luck in manufacturing washing machines. In March 2024, the company has acquired 50% stake in a company called Resojet, which manufactures fully automatic washing machines. With washing machines market being highly competitive, only time will tell if they will succeed in capturing market share in this. When the stake in Resojet was bought, the yearly revenue target of 4,000 to 5,000 crores in washing machine was set in the next 5 years. The dream is big indeed. Let's see what happens. So that's their growth plans for the consumer durables division, which is the AC manufacturing and the washing machines, which is their new business. Now let's see what plans they have for their EMS, or what they call the electronics division. In fact, one can say that the real growth for Amber might come in the PCBs and PCBA part of this division. The management has been guiding for about 50% growth in their electronics division for the next few years. As I will explain now, the opportunity is big here since things are in real early stages here in India. Although I should say there are many players including Keynes and Dixon which are planning to rule this space. 7 years ago, India was consuming about 32 billion US dollars of electronics, and this number for the last year was 115, that is 115 billion US dollars, and this is expected to go up to 300 billion US dollars by 2030. PCBs form about 3 to 4% of this market, and India consumes about 36,000 crores worth of PCBs every year, but only about 3,000 crores worth of PCBs every year is manufactured here in India. So lots of jobs and money is going out of India due to these imports. Government wants to change this naturally and hence has come up with the PLI schemes. PLI scheme for large scale electronics manufacturing and the new PLI for electronic components. These PLIs subsidize local manufacturing of PCBA and bare PCBs. To help the local EMS companies, in March 2024, Indian government also imposed anti-dumping duty of 30% on PCBs up to 6 layers imported from outside. This has encouraged domestic manufacturers like Amber to grab the opportunity and set up plants here for PCBA and PCB manufacturing. At present, as you can see, there is plenty of demand for the PCBs in the domestic space itself, but in future, exports can further boost revenue. So in Jan 2024, Amber bought 60% stake in Ascent Circuits, which specializes in single-sided, double-sided, multi-layered radio frequency PCBs catering to various industries, and it made the Ascent Circuits its subsidiary. In October 2024, Amber signed a JV with a Korean company called Korea Circuit Company Limited, which specializes in production of high density or HDI PCBs, flexible PCBs, and what are known as semiconductor substrate PCBs. With this JV, they plan to set up a new manufacturing setup near Hosur in Bengaluru, which will focus on manufacturing the entire range of PCBs offered by Ascent Circuits and Korea Circuits. That is single-sided, double-sided, multi-layered radio frequency PCBs from Ascent Circuits and high-density interconnect HDI, flexible and semiconductor substrates PCBs with the Korea Circuit. This plant will be a 70-30 joint venture with 70% stake owned by Amber and the rest 30% owned by Korea Circuit. It will be the first facility in the country to manufacture full stack of PCBs locally, catering to diverse array of sectors including wearables, hearables, IT hardware, aerospace, defense, industrial, automotive, EV or non-EV, telecom, energy and consumer durables. Since they will manufacture and supply every type of PCBs possible, I'm thinking that this new mission of Amber may see good amount of success in the coming days. Again, here too we will have subsidies driving growth. Since PCBs and PCBA is seen as a sunrise sector by the central and state governments, Government of India is providing 25% support under the SPECS scheme, while Tamil Nadu government is providing 25% support to make it a total of 50% subsidy for the Hosur plant and the machinery. Total capex is 650 crores, out of which about 300 to 320 crores will be expenditure of Amber in the next 2 financial years. While Ascent Circuits and Korea Circuits should help the Amber grow horizontally in the PCB business by offering full stack of PCBs, helping it to serve diverse sectors. The in-house manufacturing of these PCBs should reduce reliance on imports, help them get control of the supply chain and help the firm's vertical integration efforts. So it's good to see the company putting efforts to grow horizontally as well as vertically in the PCBs business. In the Q2 of this fiscal, the company's revenue for electronics division grew by 98% year over year, while the EBITDA grew by a whopping 187%. The operating margin increased as well from 3.8% to 5.8% in 1 year. For the next few years, the company management has guided a revenue jump of 50% year over year for their PCBA and the bare bones PCB manufacturing business. The electronics division target revenue is 4,000 crores for FY28. For comparison, their FY24 revenue for electronics division stood at just 1241 crores. So it is nearly a 3 to 4 fold jump for the electronics division in just about 4 years. Lastly, as I touched upon briefly earlier in this video, they plan to grow in the railways and mobility segment as well by expanding and diversifying their portfolio of products. This expansion of portfolio should increase their value addition or wallet share for passenger cars by 4x, that is from the present 3.4% to about 20%. First set of manufacturing facilities for the new products are expected to be ready by Q1 of fiscal year 2026, and the revenue will start trickling in Q4 of the same year. The order book visibility for this railway sector is, as I said, is about 2,000 crores at present. They have received orders for the new categories like doors, gangways from 3 customers already. For the railways and mobility division, the management plan is to double the revenue in 3 years. That is, by FY27, they want to grow to 1,000 crores or so from the present 480 crores recorded for FY24. Again, these are big targets, big numbers, and it can perhaps be reached since the present order book visibility is around 2,000 plus crores. So given these expansion plans and additional revenue streams that the company plans to target in coming years, now let us see the risks and valuation for the stock. What are the risks and challenges that Amber faces in their business? Let's find out. First is that of lower margins. The PAT margins are quite low, 1.7% for the Q3 of fiscal year 2025 and 2.1% for the first 9 months of FY25. The contract manufacturing of ACs is a commodity business with very little innovation or differentiation possible. It is highly competitive business and margin pressure is very high since the business is from big brands like LG, Samsung, Daikin, Blue Star, Voltas and Panasonic who are their big customers. The margins though for Amber are improving with time. What was 6.9% in FY23 improved to 7.7% in FY24. The 9 months FY25 operating margin stands at 7.8%. As they establish themselves in the PCBA and the bare PCB manufacturing, and as the share of electronics division increases in the revenue pie, the margins are expected to improve even further. Especially the advanced technology PC boards they plan to manufacture in their Hosur plant is a higher margin business. Hopefully they'll succeed and at the same time lift their margins. The PE for Amber is quite high. It is around 101. The ROCE for Amber is just about 10%, which is quite low compared to that of Keynes, which is 15%. For Dixon, the ROCE was 40% in the recent quarter and 30% in FY24. Also, the AC market is a cyclical business where revenues fluctuate widely from quarter to quarter and at times across years, depending on the temperatures experienced in those years. You can see from the numbers here that the December and September quarters for the company is often less than almost half of that of March and June quarters, and EPS goes down to almost negative numbers from the mid-20s in the good quarters of March and September. Last year, the heat wave in the Indian subcontinent helped company post record figures. This may not be the case next year if the temperatures are normal. Again, diversification with the current moves on the PCBA and bare PCBs should help the company achieve more consistent, sustained growth in the coming years. Cash flow is okay, but spending is quite heavy as seen in FY24, where cash from investing activity is quite high with heavy outflows such as the 1,035 crores seen in March 2024. This is primarily due to investments in fixed assets and acquisitions. While this indicates the company is on a growth trajectory, but it also suggests high capital expenditure. To support its investments, the company has relied on financing activities. You can see notable inflows like 400 crores in March 2020 from equity sale and 653 crores from borrowings in March 2021. Fortunately, there was a net outflow of 122 crores in March 2024. This suggests a shift towards debt repayment or reduced financing in the last fiscal. The debt is around 2032 crores while debt to equity is around 0.76 as per the data presented in the screener. The debt is quite high compared to its peers Keynes and Dixon. The valuation of the firm is on the higher side with PE of 100. In order for return on investment to be substantial and to justify its valuation, the company needs to post a growth of at least 40 to 50% in the coming 2 to 3 years. So at the present valuation levels, even though the stock has corrected a bit, it is still more of a long-term investment. So that's it from my side. Hope the analysis was useful. Please don't forget to hit the like button and subscribe to the channel for future updates. Thanks for watching and have a great day.